This is where we take your source material, all the dense research, the articles, the financial notes, and we pull out the critical knowledge you really need.
And today we are digging into something that is a real Wall Street head-scratcher.
It really is. We're looking at the biotech company SLS Life Sciences. The ticker is SLS.
And here's the paradox. The company announced what really looked like a failure on paper. I mean, they missed a major deadline for a clinical trial.
And you'd expect the stock to just crater, right?
You would, but it didn't. It spiked 15% almost immediately. And now it's sitting right near its 52-week highs.
And that's the mystery we're unpacking in this deep dive. How does that happen? How do you miss a huge milestone for a phase 3 trial and the market turns around and rewards you for it?
Well, the core idea here, and our sources really hammer this home, is that in the world of aggressive cancer research, a delay is often the best news you can get.
The golden signal.
Exactly. It's the signal everyone was waiting for because it's powerful evidence that the drug is actually working.
Because that delay implies something just extraordinary, that the patients in the trial are living. They're surviving significantly longer than anyone thought they would.
So our mission today is to break all this down. We're going to get into the mechanics of this trial, the science behind why this so-called failure is actually proof of success, and why analysts are now looking at this stock and putting a price target of around $7 on it.
It's a real lesson in reading between the lines of those biotech headlines.
Absolutely.
Okay, so let's unpack this. We have to start with the specifics. The drug at the center of all this is galinpepimut S, or GPS.
Right, GPS. And it's targeting a cancer called acute myeloid leukemia, or AML.
And AML is not just some standard cancer.
Oh, no. It is brutally aggressive. For the specific group of patients in this trial, so we're talking about older patients or those who have relapsed, the prognosis is just grim.
How grim are we talking?
Standard of care. You're looking at a survival of maybe 6 to 8 months. That's it. It's a desperate race against time, so any extension of life, even a few months, is monumental.
That context is so important. If survival is measured in months, then every single week of a delay in a trial, that means something.
It means everything.
Now, we have to talk about how this trial was designed, because that's the key to understanding the signal here. This wasn't a trial that was set to end on a specific date, was it?
Not at all. And this is the crucial point that trips so many people up. The REGAL trial is what's called an event-driven study.
Okay, what does that mean exactly?
It means you don't just stop the trial on, say, New Year's Eve because the calendar says so. You stop it when you have enough data points to prove your case statistically.
And in this context, an event is something very specific and very tragic.
It is. The event is a patient death. The trial was designed to run until a total of 80 events occurred across the entire study.
So across both groups,
Yeah,
the ones getting the drug and the ones getting the placebo.
Correct. 80 events was the magic number. That was the statistical threshold they needed to hit to unblind the data and prove mathematically if GPS was extending life compared to the control group.
So the sources we have say that based on all the historical data on how predictably and terribly AML progresses, the expectation was that they'd hit those 80 events by the end of December 2025.
That's right. The statisticians built their models. They used those historical survival rates of 6 to 8 months, plugged in the numbers, and the calculation came back saying we should hit 80 events by late December.
That was the informal deadline everyone on Wall Street was watching.
It was.
So what was the actual update? What was the news that dropped right before the new year and caused all the confusion?
The update said that as of December 26th, they'd only reached 72 events.
72, not 80.
Right. They were short by 8 events. So to a casual observer, that just screams delay.
Yeah.
A missed deadline. It sounds like a setback. Maybe they had trouble enrolling patients, or the data was messy.
But the incredible reality is that those 8 missing events, that's the whole story. That's the most powerful data they could have hoped for at this stage.
Precisely.
Let's transition to that aha moment then, because we really need to explain this inverse relationship. How can a delay in deaths be such incredible news? Is there any chance this is just, a fluke, bad data collection?
It's a fair question. But in a huge, well-managed phase 3 oncology trial like this, data integrity is.
Yeah.
It's just incredibly high. And if the problem was slow enrollment, they would have announced that months and months ago.
Right.
The fact that the trial's own projections, which are tracking mortality or falling behind schedule, can really only mean one thing from a scientific perspective.
So let's look at the math one more time. The model predicts 80 deaths by December, but only 72 happened. What does that shortfall tell you definitively about the patients in this trial?
It tells us that the event rate, the speed at which patients are sadly passing away, is slowing down a lot.
Right.
Analysts visualize this with something called a Kaplan-Meier curve. It's basically a chart of survival over time. If your drug is working, that curve flattens out. The delay is mathematical proof that the curve is flattening. Survival is being extended.
That is just profound, especially when you remember the baseline. Standard survival is 6 months. We're now into January 2026, and 8 predicted events didn't happen. That means those 8 people, and probably many more, are still alive when the model said they wouldn't be.
Exactly. Think about it. If the GPS drug was useless, if it didn't work, the patients would just pass away at that expected aggressive rate. The trial would have hit 80 events on time, maybe even early.
So the only plausible scientific reason for the event rate to be lagging this much is that the drug works.
The drug is working. The patients in the GPS arm of the trial are defying the statistical average for AML. They're living longer.
So the delay isn't just good news. The delay is the data. It's like getting a secret sneak peek at the results before they officially open the vault.
That is the perfect way to put it. You're getting an early, probabilistic look at the survival benefit. The slower this event rate gets, the more likely it is that when they finally unblind the data, the final numbers are going to be really, really good.
Okay, and that powerful scientific signal, it translates immediately into the financial markets, which is what brought our listener this source material in the first place. Let's talk about the money.
Yeah, the speed of the market's reaction here was just remarkable. As soon as the smart money figured out that a delay actually meant better survival, the stock just popped.
15%.
15%, almost instantly. It closed around $4.35, and it just blew past its old trading range. That signals a really fundamental reevaluation of the company. The whole risk profile just changed.
So let's talk about that consensus price target. It's around $7, which is, what, about 60% higher than where it is now? How do analysts justify that big of a jump just based on a delayed event rate?
Well, when an analyst tries to value a biotech, they project out peak sales, and then they discount that number heavily based on the risk of failure.
And for a phase 3 cancer trial, that risk is enormous.
It's huge. Before this news, the probability of failure, the R&D risk, was baked into the stock price. It was a coin flip at best.
And the delay just changed that entire calculation.
It slashed it significantly. Analysts are now building their models assuming a much higher probability of success. That's $7 target. It suggests they're expecting peak sales in the hundreds of millions because GPS is targeting a huge unmet medical need.
The survival signal de-risked the science?
It de-risked the science, which lets them lower that discount rate, and that pushes the valuation way up.
And there's another layer here we have to talk about, a technical one. A massive short interest in this stock.
Oh yeah, that is a critical piece of the puzzle. Short interest just means a lot of investors were betting against the company. They were borrowing shares and selling them, hoping the trial would fail and the price would crash.
But the scientific signal from the delay just shreds that entire argument, doesn't it?
It completely demolishes the clinical failure thesis. So now what happens if you're a short seller and you're suddenly faced with this undeniably positive data?
You panic.
You panic. If this stock keeps climbing, let's say it breaks above a key level like $5, those shorts are forced to buy back the shares they borrowed to limit their losses. That's a short squeeze.
And that's not normal buying. It's forced buying.
It's mandatory buying, fueled by fear. And it can just pour gasoline on the fire and send a stock on a parabolic run far beyond what the fundamentals might even suggest.
So you have a fundamental story getting better layered on top of a technical setup that could explode.
Exactly. And to top it all off, the company has confirmed they have enough cash to last into 2026.
Which takes away the other big risk, right? The risk that they'd have to sell more stock and dilute everyone.
Yes, that risk is off the table for now. So you have financial stability plus a positive clinical signal. It makes the whole investment case so much cleaner than it was just a few months ago.
Okay, so we've got the science, we've got the financial logic, the technical pressure cooker. For the listener, what's the next thing to watch? What's the next catalyst?
It all comes down to one thing now. Our entire focus shifts to that magic number, 80. SLS has to announce the exact day that the 80th event finally happens.
And based on this new, slower event rate, the sources are saying this could happen any day now, sometime in January, maybe early February. We're in a very tight window.
We are. And once that 80th event is confirmed, the trial goes into its final, most critical phase. The data gets unblinded.
That's where they crack the code.
They crack the code. They separate the group that got GPS from the group that got the placebo. And for the very first time, the company and the researchers will see the raw data. They'll see exactly how many patients survived in each group.
And that's when they'll know for sure how well the drug worked.
That is the definitive proof. They'll calculate the hazard ratio, the p-value, all the hard numbers. But if that unblinded data confirms what this delay is already screaming at us, the patients are living months longer than expected, then that $7 price target. That might just be the starting line.
You know, if you take a step back, this whole situation is just a perfect example of why you can't just read a headline in biotech and think you know the story. Missed deadline sounds like a total flop.
But if you don't understand the mechanics of an event-driven trial, you miss everything.
You miss the entire narrative.
Absolutely. The analysis of this delay has, in the eyes of the market, significantly de-risked the science. The main risk has shifted from, will the drug even work, to, okay, will they execute the final data readout smoothly? It really proves that if you don't grasp that a delay in reaching a mortality endpoint is a sign of success, you would have missed that 15% jump that rewarded the investors who did.
And that brings us to our final thought for you, the listener. If a seeming setback in a medical trial can actually be the strongest proof of positive performance, where else might that inverse logic apply?
Right. What other fields? Maybe in complex software projects, long-term construction, even things like government budgets.
Where might a headline that sounds like bad news actually warrant a much deeper dive? Because the delay itself is the unexpected proof that something is working better than planned, or that a system is more resilient than anyone thought.
It really highlights that difference between a calendar deadline and a true statistical threshold. Something to think about.
Thank you for sharing.